Are you over 60 and planning to file your taxes soon? Before you do, let me ask you something important. Are you absolutely certain you're not missing a deduction or benefit that could quietly save you thousands of dollars this year? Because 2026 is not a routine tax year for older Americans. There have been meaningful changes that affect Social Security recipients, SSI and SSDI beneficiaries, and retirees living on fixed incomes. And the truth is, most of these updates do not come with bold headlines or warning letters. If one small detail is overlooked, the money simply stays with the government. I'm Sarah, and here at Senior Social Security Today, my goal is to walk you through these updates calmly and clearly so you can protect the income you worked your entire life to earn. Let's begin with the change that could have the biggest impact on your federal taxes this year. There is now a new enhanced deduction available for Americans age 65 and older. This additional deduction can be worth up to $6,000 per qualifying individual. And this is on top of the standard deduction you already receive. Now, this is not a check that arrives in the mail. It's not a stimulus payment. A deduction simply reduces the amount of income the IRS counts as taxable. So, for example, if your total income from Social Security, a small pension, or part-time work was around $25,000 last year, this additional senior deduction could significantly reduce, or in some cases, eliminate any federal income tax you might otherwise owe. If you are married and both spouses are 65 or older by the end of the tax year, you may qualify for a combined additional deduction. For many couples living primarily on Social Security and modest retirement withdrawals, this could mean no federal income tax at all. However, there is something very important you must double check. This deduction does not require a separate application. It is built directly into your federal tax return, including Form 1040 and the 1040 SR, which is designed specifically for taxpayers 65 and older. But the IRS system only applies the extra deduction if your age is properly indicated. If that age box is not checked, the deduction may not be applied automatically, so before you file, whether you're using tax software, a paid preparer, or a free service, take a moment to confirm your age is correctly entered and that the enhanced senior deduction appears in your final calculation. Never assume, always confirm. Now, let's talk about the paperwork you'll need. Every Social Security recipient should receive Form SSA 1099 by early February. This form shows exactly how much you were paid in benefits last year. The IRS receives a copy as well, so your return must match those numbers. If you have not received your SSA 1099, you can download it through your My Social Security online account or request assistance from your local Social Security office. Even if your benefits end up being non-taxable because of the enhanced deduction, you still need this form to file accurately. And it serves another purpose many people overlook. It is often required as proof of income when applying for assistance programs such as SNAP, heating assistance, housing help, or property tax rebates. If you receive SSI, your payments are generally not taxable, but you will have a benefit verification letter that serves a similar role for assistance programs. Keep it in a safe place. Organization is one of the simplest ways to protect yourself. Create a folder labeled 2026 Tax Documents and keep your SSA 1099, any pension 1099-R forms, bank interest statements, Medicare information, and last year's return together. Now, let's address something that has confused many seniors this year. You may have heard that there was a cost of living adjustment, or COLA, applied to Social Security benefits. On paper, that increase is real. However, some retirees opened their bank statements and felt disappointed. Why didn't the increase feel larger? For many beneficiaries, Medicare Part B premiums also increased. If your Medicare premium is automatically deducted from your Social Security check, and for most people it is, that deduction happens before the money reaches your account. So while your gross benefit increased, the higher premium may have reduced what you actually saw deposited. There is, however, a program many seniors are unaware of. Medicare Savings Programs, administered by states, may help pay some or all of your Medicare Part B premium if your income meets certain limits. If you qualify, the state can pay that premium on your behalf. That could mean over $200 per month stays in your Social Security check instead of being deducted. Eligibility varies by state, and income limits are often higher than people expect. Many seniors assume they do not qualify and never apply. It is worth contacting your state Medicaid office and asking specifically about Medicare Savings Program eligibility. Now let's talk about another area where seniors often lose money unnecessarily: tax preparation fees. If your return is relatively straightforward, mainly including Social Security, a pension, or modest retirement income, there are IRS-supported programs that can help you file for free. The Volunteer Income Tax Assistance Program, known as VITA, and the Tax Counseling for the Elderly program, known as TCE, offer certified assistance at no cost. TCE, in particular, focuses on taxpayers age 60 and older and provides volunteers trained in retirement-related tax issues. These services are available in many community centers, libraries, and senior centers. If you qualify, your return can be prepared and filed without paying hundreds of dollars in fees. Now, beyond federal taxes, I encourage you to check something else that could save you money long-term: property tax relief. In many states, homeowners over 65 may qualify for a homestead exemption, senior exemption, or property tax freeze, but these are usually not automatic. You often must file a simple application with your county assessor. Deadlines are commonly in March or April. Missing the deadline could mean waiting another full year to apply. Even a modest reduction in taxable home value can save hundreds, sometimes thousands over time. It is worth a phone call to your local assessor's office to ask what senior property tax relief programs are available and what form you need to file. And finally, let's briefly mention utility assistance. The Low-Income Home Energy Assistance Program, often called LIHYAP, provides help with heating and cooling costs. Many seniors qualify based on income but never apply because they assume it is only for emergencies. In many states, it provides seasonal credits even if your account is current. You may also want to ask your internet provider whether they offer a low-income or senior discount plan. Even modest monthly reductions can add up over the course of a year. I know this may feel like a lot of information, so let's simplify it. Before filing your taxes, confirm your enhanced senior deduction is applied. Locate your SSA 1099 or benefit statement. Explore whether you qualify for a Medicare Savings Program. Consider using free tax preparation services. And check with your county about property tax relief. None of these steps require advanced financial knowledge. They require awareness. And now you have that awareness. You spent decades contributing to Social Security, Medicare, and your community. Taking advantage of available deductions and assistance is not asking for special treatment. It is ensuring the system works as intended. Move through this tax season carefully. Stay organized. Double-check the details. And remember, small steps taken now can protect your peace of mind for the entire year ahead. You are not navigating this alone. Here at Senior Social Security Today, we will continue bringing you clear, steady updates so you can move forward with confidence.